Iron ore sits at an important psychological level. Rate cuts are within sight, but gold doesn't like the number, and striking workers at a copper mine don't bother copper traders. Grab your coffee and let's get into it. I'm Shae Russell and welcome to your Mining Minute. Gold falls lower to $24.47 as CPI data in the US was slightly better than expected, taking the chance of a bigger rate cut off the table. Silver couldn't catch a bid either and dips down to $27.55. Copper traders aren't spooked by striking workers in Chile and more interested in Chinese production, with the base metal trapped at $4 per pound. China's copper cathode production for August is expected to fall by 2.4% month on month, with Chinese smelting capacity predicted to reduce over the rest of the year. Iron ore flirts with the key psychological level of $100 per tonne, and Beijing hasn't offered up any stimulus to support the construction sector within the country. In addition, margins at steel mills have collapsed and Chinese companies are unwilling to buy more iron ore. Steel production in China fell 1.4% from January to May this year. Brent is kicking along at $79.90 per barrel with no meaningful direction created overnight. Australian mining giant BHP is struggling to convince striking workers at the Escondida copper mine back to the negotiation table. While the mine is operating on a contingency plan, the strike is keeping two important plants offline. With both the troubles in iron ore and copper, this hasn't helped the shares of major Australian mining giants, with BHP, Rio and FMG all falling on Wednesday. And annual US consumer prices came in below 3% yesterday, the first time in 3.5 years. US CPI is running at 2.9% annually, which is still above the Federal Reserve's target, but this latest reading suggests prices aren't rising as fast as they were. This number does bake in a Fed rate cut for September. However, hopes of a rate cut larger than 25 basis points are a long shot. Now tap the like button so you've always got the Mining Minute in your feed.